From sharp NASDAQ swings to brutal US opens, index trading in 2025 isn't for the faint of heart. So, how do pros survive? Well, that's what we are going to find out today. Welcome back. I'm Francois Duplessis, your market analyst here at ATFX Africa, and today I'm joined by James Bruce, a seasoned prop firm trader who has spent years mastering index markets from the inside out. Our theme today is mastering indices from prop desks to retail screens. James, thank you so much for joining me once again. How are you doing today, brother?
Yeah, good to be on as always, Francois.
Thank you so much. Well, let's dive straight in. So this year we have seen unusually sharp intraday swings. And I know you're a day trader like me. So, I mean, if we are looking at something like NASDAQ or DAX, especially around US tech earnings and so forth, how has this changed your execution style compared to previous years?
Yeah, this year has been obviously quite aggressive. We've had the Trump tariffs in April that obviously markets sold off pretty heavily. We made, I think at one point, the DAX was up about 25% year to date coming into April. It started off very, very aggressively, moving to the high side. And I was having a good time on the DAX there. And obviously we had massive sell-off across world indexes because of the Trump tariffs. And I mean, some days on the DAX and even NASDAQ more specifically, we were seeing 1,000-point flushes to the high side and then just complete reversals back down. So I think in terms of how I've been trading and what's been working for me has been quite quick to take profits. I think swing trading has been a little bit more tough because you can be shaken out of positions quite easily. You know, you're in a nice position overnight. Maybe you got your stop locked, it flushes down and then continues rising. So for me, I'm a day trader scalper by heart. That's what I'm doing. I'm in and out of positions in the same day, sometimes even within the same couple of minutes. So I think for me, just taking profits quite aggressively and not being too overexposed overnight, due to economic events and that sort of thing.
So you mentioned that, swing trading is really difficult, especially on indices lately. And I do agree with you on that. I mean, even with a lot of the indices like NAS and S&P reaching all-time highs, I've even seen on my own trading, a lot of the times we will get to, that all-time high. And then during the next session, you could actually short the S&P, which I'm not normally prone to do. I'm a bullish bias guy. So,
sure.
As a prop trader yourself, what do you think retail traders consistently miss about how smart money moves when it comes to indices, especially during high volume opens like the US?
Yeah. I think personally what retail traders miss is they think they can come into the US market open with a position quite heavily exposed. And obviously that first even 10, 15 minutes of that market open can be quite aggressive. And if you're in a move that's, in a position that's too heavily weighted and over leveraged, you can be shaken out before you actually could get easier moves later onto the position. If I was giving some advice into my earlier days, wait for that first 50 minutes. Last time I was on, I spoke about the opening range. Now I use the opening range with the VWAP. I would wait for that first 50 minutes to set in and then look to take positions. That's personally what I do. And I find that sometimes when you're too eager coming into positions, you miss the easier moves later on in the day that actually fit, or later on in the session that fit your style. So from that perspective, and also trading into news events, please do not trade into news events. I think it's a losing game long term. Might as well just go to the casino table and play on red and black, because trading into NFP, you're full porting your account or prop firm account into NFP or CPR or FOMC. You're asking for trouble. You might get lucky once or twice, but it's not a long-term strategy. So that's what I think retail traders get wrong. Specifically, I would say what I've seen on social media in South Africa is that full porting into news, and then as well as trading right into the open. Let the market settle first 10 to 15 minutes and then look for those positions using that opening range trade.
Zero commission on stocks? Yeah, nothing. What if you could get this value today? Turns out you can. Join ATFX now and let's get you started.
Definitely want to touch on that opening range just now because I do have some questions for you around that. But I also wanted to ask, I know you don't just trade US Open, you also trade UK Open, if I'm correct in saying that part. Now, what we have noticed, and I know I've noticed this in my trading, and I wanted to get your opinion on this. During that overlap period, where we have that overlap between the UK and the US, especially around 1:30 South African time. The session has been quite fragmented, if I can put it in such a way. And has this caused you to adjust your strategies depending on which session you're trading, or don't you keep trades during that time? What's your input on this?
So normally when I am trading both London or UK Open on the DAX as well as American markets, I'm kind of in and out of my trades within, as I said, like most of my trades are not longer than 30 minutes to an hour. Let's just say an hour max. Like most of my sessions, I try and keep to 2 hours of sitting in front of the screens maximum. In fact, actually what I've done is, so London Open at the moment is 9 a.m. South African time. I'll be off the desk done trading by 11 a.m. South African time. But what I've actually done in the last month or so, I've actually automated my trading in the London session. So obviously you guys have seen, I've got back tested results on the opening range, and I can actually even pull up some of those on screen. But basically what I've done is I've automated my London trading because I want to be spending time with family. That's why we get into trading, to have more free time, to be able to do what we want when we want. So I've basically automated my trading on the DAX in the London session, and then I'm only really looking at New York market open, because personally also for me what I found is the DAX has, since we've reached all-time highs, even though the DAX likes to follow American markets, it has been trading a lot more choppier recently, what I found in the last 2 or 3 weeks. And I think just automating that has been quite nice. And I have seen, I do agree with you with that overlap session. I used to find nice trades like on the DAX, maybe like pre-American market open. Like I'll come get my stuff out for American markets, and I might find like a nice trade on the DAX. But what I've just seen is that kind of dried up. And the DAX has actually been trading in a very choppier range more recently, like last 2 weeks. That's why I'm glad I've kind of automated that, and I'm literally just focusing on the first 2 hours of the US market open myself.
Brilliant. Would you mind elaborating a little bit more on the automation that you have done on your London Open session? That would be amazing.
Yeah, for sure. I can actually bring up my screen here, show you guys what this looks like. But basically what I have done is I've got some good connections at a company called Edgefill, and they basically do like reports, back testing, stuff like that. And now they've recently come into the automation side of things. And if we just go like this, let me share my screen, I can actually show you. So this is the algo that I am running at the moment. I actually took a win on it yesterday, but I had 2 losses to start the week. Monday and Tuesday, I took losses. Today was a winner. I actually don't even look at it. It's taking trades to my account, and I don't even have to actually monitor it. So let me actually get it up here for you. Let's go like this. Can you see that?
Perfect.
You can see that, correct?
Yes.
Yep. So you can actually see today it took a long on the opening range breakout. You can see quite simple, which I spoke about last time. Opening range low is the red, opening range high is the green. We took a long on that. But let's go to the strategy tester, and you can actually see this is, as I said, you can come and change these settings all in here in the back end. And I'm always optimizing and checking out. So I've been doing this for the last month, but we can actually see, let's look at the last 90 days on the strategy. It has a profit factor of 1.401. Right, so 65 total trades, 67% win rate with an 8% gain and a 3.72% drawdown. Now, this is specific. You can come in and change this, everything like that. This is what I'm working on. The reason being is I'm trying to buy back my time. And then, in fact, I'm also actually running one on the NASDAQ, and we can bring that up over here. So let's go like this, change the settings, obviously, for the NASDAQ. And if we go to the strategy tester, so this is the NASDAQ. Let's go to the last 90 days. This one actually has been working quite nicely for me. You can see it's got a profit factor of 2.7, 75% win rate over 37 trades. This is in the last 90 days, 14% gain with a 2.41% drawdown. So in terms of automation, I think we always get into trades, and this is purely systematic trading, right? From the algos, obviously. From my discretional trading, I'm trading the opening range still, but more with a discretional point of view. But from purely opening range, these statistics, I mean, if you had to follow these rules yourself, you would make money. Clearly, you can see that. But I think just buying my time back, Francois, like I went to a wedding on Friday 2 weeks ago, a friend's wedding, and I wasn't able to be on the desk, but I still was able to make money because my automation algos were running in the background. So I think obviously in the times where AI and everything is coming and there's a lot of, companies and even like resources to be able to do this, we should, as traders, be using it to our advantage. For me, I'll always prefer my manual discretional trading. It's just who I am. But I don't want to be on the desk for 10 hours a day. I want to be on the desk for 2 hours a day. London session, I buy back my time. So that's what I've been working on.
Absolutely amazing. That's super interesting to see, actually, because, and it is like you say, as a trader, that is our ultimate goal for doing this, is buying back time. That's all we can do at that point in stage. Getting back to your discretional trading, how does your trading look, and what is your opinion on scaling into your trades? Is that part of your trading strategy, or are we just going get in, get out? So how do you personally decide, even based on your trades, which ones do you scale into, which ones don't you scale into, and how does this actually affect your entries and your exits?
Yeah, so again, like from a systematic perspective, my algos are only taking one position a day. It's either a win, full TP, or full loss. That's purely systematic. But from my discretional trading, I love adding into positions. Normally, I'm not adding into my positions more than twice. I just found that from experience, when you start doing that, you start seeing red quite quickly, and it can get away from you. So I'm very discretionary in that. I'm a lot of field traders. When you trade with a system and you've been trading for a number of years, you start to get a idea of what you would like to see once you're in a position or once you're looking at the markets. I can't per se say this is what I'm exactly looking for. It's impossible to say that. There's actually a saying that says only the game can teach you the game, right? Like that you learn from experience. So when you've been doing something over and over again, that's what I like to do, and I go for it. And it's purely based on feel. So like yesterday, I actually made money. In fact, actually trading long the Dow YM to the high side. And overnight we had Home Depot earnings. The Dow was looking quite bullish compared to the NASDAQ and S&P, where we were seeing new lows formed overnight. And I actually bought the run up into the open, and I added in because we were getting momentum higher. I like trading based on momentum, but about 5 minutes into the open, 10 minutes into the open, I saw we were getting that momentum, and I added into my position. And that's just, I'm in a position, I'm reading what's in front of me. It's moving in my favor. I want to be adding into that, compared to something that you're in a trade and maybe you're looking for a long and it's coming down against you. That's probably where you should just cancel your orders, get out of the market, and look for re-entries. But yes, I do like adding into my positions. I would advise, though, you need to have a limit of how many times you can do it. Just from my own experience, sometimes you can start adding in and all of a sudden you got 7 positions on, and you start sweating a bit.
Super tight spreads. Yeah, tighter than your jeans after Christmas lunch. What if you could get this value today? Turns out you can. Join ATFX now and let's get you started.
Absolutely amazing. Now, I know I've been getting the question a lot lately that, indices have become very event driven in 2025. And some traders are really struggling to make sense of this. What is the one thing, as we are closing up here today, that you could give our traders here today that they need to either change or adapt that will actually improve their trading when it comes to trading indices specifically?
Yeah. The one thing I'm always going to say is control what you can control. Focus on what you actually have control over. And I think the one thing, if traders do, it's something that I do my own trading every single day, and it's helped me cut out the big losing days. I think if most traders can cut out big losing days, they'll give themselves a much more higher profitability chance of being long-term profitable. So have a max loss set for the day. For example, if you are trading on your prop firm accounts or on your personal account, have a number that you can fathom losing in that day that won't set you back a week or two. Because if you can do that, from my own experience, you will live to fight another day, and you actually give yourself a much better chance of making money long-term. So have a number, have your daily loss set in, and if you need to buy EAs or something, I've got some risk management settings in the background that actually locks my account out. Once I hit that number, I can't actually place any more trades on my account. That has helped me, and I know it's going to help you. So that's the one thing I would say for index traders, is have those max daily loss limits set in.
Brilliant. Well, as I always say, protect your capital. If you don't have capital, you can't trade. So regardless of how much money we make, if the capital is finished, there's no more trading taking place. But James, as always, thank you so much for the brilliant insights that you shared with us today. And I think really there's so much value that every single person watching this today can take from everything that you said. So to everyone watching, if you found this useful and you would like to get in touch with James, I will drop his Instagram handle in the description below so you can pop him a message on there. As always, if you haven't done so yet, please remember to like and subscribe to our channel and drop any questions that you would like myself and James to cover during future sessions. And with that, we come to the end of today's market brief, brought to you by ATFX Africa, the broker that gives you an edge in today's markets. Simply head over to ATFX Africa by clicking in the link in the description and go and experience the difference for yourself. For all our viewers here today who would like to have a look at prop trading, I will also put a link in the description below to AT Funded, which is the ATFX prop firm. And then traders, until next time, stay sharp, stay focused, and trade smart.
Nice.